I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like the service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's August 14th, 2013. I'm Logan Burgess. To my right here is Brock Shimano to help break down the action we saw in the grain market here on a Wednesday. Let's jump into fire tips, see how the grains closed the day out. We see strength across the board here. New crop corn up 8 cents. New crop beans leading the way higher, up 11 1/4 for the new crop contracts. And we see a relatively quiet day as it pertains to wheat, up just 2 1/4 in Chicago, up 2.5 cents in Kansas City. You know, Brock, I guess looking at the quotes here, it's not surprising we see continued strength out of soybeans given the information the USDA released on Monday. But corn in particular, we weren't as convinced had some legs. Kind of in your mind, what did we see pushing that here today?
You know, we did see a nice positive day in corn here today. Right. The old crop contracts were the leader to the upside. There were some ideas floating around out there that the hurricane forming in the Caribbean right now is going to make its way into the Gulf, possibly affect some of the Delta harvest progress that we were expecting to see start happening here in about the next couple of weeks or so.
Right.
If we do see some harvest progress delays, the thought there being that the supply of corn moving back up the pipe, back up the Mississippi, and getting into the Midwest again to alleviate some of the supply concerns there. That's not going to be happening, or it's going to be delayed a couple of weeks. So the thought there is that we need to put a little bit of a premium on the old crop contracts. We did see some bull spreading early on in the session, but towards the end of the session we did kind of see it even out with the old crop in relation to the new crop. Yeah,
certainly. You know, one thing that might have been supporting those old crop futures a little bit too was the numbers that we got out this morning from the EIA. Take a look here at the red bars here are showing weekly production figures, and as you can see, we had a little bit of an uptick from last week. Production was up 4,000 barrels per day. Last week, averaging 857,000 barrels per day. And that's really understandable at this time of year, just given the crush margin. We've been talking about it quite a bit here on GrainTV. We've seen a seasonally high crush margin right now in the state of Iowa. That backed off a little bit here last week. Still sitting about $2.30 per bushel, though. So that's certainly supportive. And as you can see here from the green line, that's our expectation here moving forward. We're looking for some pretty strong production numbers here over the next couple weeks. Might do a little bit of work to support old crop corn. As we know right now, ethanol facilities are very aggressive bidders of old crop corn when you compare them to other markets. So could add a little bit of support to old crop. We'll have to see what next week brings for ethanol production. You know, Brock, tomorrow, though, as it pertains to soybeans, the trade's going to be watching the NOPA crush numbers very closely. I know we got some expectations out today. Kind of what's the trade looking for out of this?
Yeah, basically what we're looking at here is the average of the analyst guess conducted by a poll conducted by Reuters. You can see on the first column here that the average for July guess for crush figures was 116 million bushels being crushed during the month of July. And really the range was pretty tight, 110 million bushels to 120, but compared to what we were in June, 119 million bushels, we're looking to come in just a little bit lower than that. So we'll have to watch tomorrow, see if we do come in around the average of the analyst guess, or if we come in substantially higher or substantially lower. We could see it move the market a little bit. You know, I don't think the numbers that will be reported tomorrow are going to move the market much one way or the other. We do know that the numbers that we got on Monday have really been the driver in the trade over the last 3 or 4 sessions here, and I think that's going to continue. But you know, keep in mind we are in the middle of the trade range that we have been trading for the better part of the last 4 or 5 months. So you know, that's really going to be the driver here moving forward.
Yeah, you know, on Thursdays as well we get the export sales report out. I know on Monday of this week we saw some pretty strong export sales reported for soybeans. That won't be reflected in tomorrow's number, but what's the trade looking for? Are they looking for export sales of beans to remain strong?
You know, on the old crop we're looking for pretty weak sales. Old crop corn and soybeans only about 100,000 metric tons expected for both of those. Old crop wheat 550 to 750,000 metric tons, so pretty good sales for wheat. We've seen that pattern continue throughout the beginning of this marketing year for wheat. New crop is where we're going to have to focus for soybeans. 900,000 to 1.1 million metric tons is expected on the new crop. New crop corn just 250 to 450,000 metric tons, so relatively light sales for corn on new crop. New crop beans is where we're going to have to focus tomorrow. Of course, we'll be tweeting those numbers when they come across the newswire tomorrow morning.
Absolutely. That wraps up the action here on GrainTV for a Wednesday. Thanks a lot for joining us. We'll see you here tomorrow to break down the action from NOPA and the export sales report.